Vipul Prasad also joining us from Magadh Capital this afternoon. Vipul, good to have you with us. We're seeing a bit of a recovery coming in, although the overall mood has been, somber given the various factors at play currently. A lot of the commentary coming in has been saying that we might actually see a revival in some of those consumption trends, for example, or in overall consumer spending post the elections. Would you agree? Do you feel that we might still remain insulated to some of the global cues and actually see somewhat of a stability return post the election period?
Yeah, I do agree with this view to a large extent because the first thing is that the election got drawn out for a very long period. So the debate that we saw around jobs and around rural economy got accentuated and turned into a vicious cycle of its own, wherein consumers started getting nervous about their future. And we saw that happen finally. Initially it started with two-wheelers, then four-wheelers, passenger vehicle sales, then airline traffic. And in fourth quarter we also saw pressure on FMCG companies' volume growth. So it's not just driven by this, but this did play some role. Then some one-off event-driven things like NBFC pressure and the concomitant pressure on the debt market also took a toll here because the cost and availability of credit also went down. So I think these things, once the new government comes in and after that again we get into this group, I think rural economy should again get back to its revival mode. Credit availability should improve and consumption should also start improving. And so in that sense, consumption in FMCG is one area which looks interesting, more from a 2-3 year forward perspective. I don't think it's going to turn overnight just after the elections. But yes, if we are able to look into, say, second half of fiscal 20, some of the good companies can start delivering again volume growth in high single digits or even higher. So yeah, I do agree with this view. And same probably would be true for some of the large banks. They also can benefit because after the elections are over, I would say that in the last 2-3 months, we saw a kind of extreme slowdown in even the infrastructure spending that had been a key area for economic growth in the country till, let's say, late 2018. But last 3-4 months, we have seen a big lull in that area also. So once the government again takes shape, I think that also should improve.
Okay, fair point. Vipul, just wanted to understand what is it that you've made of this entire consumption slowdown that one is staring at. Having said that, there have been a handful of names which have managed to still beat, what the street was penciling in. Godrej Industries, for instance, or for that matter, Marico, when at the time when everyone from the giant Unilever to the DABURs of the world are facing the slowdown. Within this turmoil, do you sense there's any opportunity for any of the FMCG names that one can maybe buy at the current decline or maybe buy at the top?
See, I would not say that only those companies that delivered or in this quarter or which exceeded expectations or met general expectations, only those companies are looking good. In fact, in my view, there are some companies, for example, like Britannia, didn't do too well in terms of versus the expectations of the street. But I am fairly confident that they have all the drivers in place, not just for top-line growth, but also for margin expansion incrementally from here. So if I have to name...
Vipul, we're just going to come back to you. We're just going to fix that connection there and, go back across once we have a clearer feed coming in there.
Vipul, while we do have the pharma sector that came under scrutiny in trade yesterday, and you did have the antitrust probe from the US, which seemed to singe the sector as a whole, some seem to suggest that the problem is far deeper. What is your assessment on pharma? Play the sector at all? Say even the large cap quality names?
Let me begin with the answer. No, because whether it is the problem runs deeper or not, even if we are unable to gather that thing, one thing is for sure, these kind of things keep cropping up. When you are up against legal and regulatory system, when you are facing these kind of issues, it's difficult to say that, okay, now it's over. So for a couple of months you may think that okay, things are going in the right direction, then all of a sudden something again can come up all of a sudden and then pull everything down. Secondly, even in terms of business dislocations that these companies had faced, especially in the US, in terms of lack of loss of pricing power to a large extent, and also increasing competition, they seem to have ebbed, but they have not vanished. They have not gone away altogether. Similarly within India also, so if you look at occasional statements from the government, it does seem like that it's not a free hand that these companies are getting in pricing their products, so in every sense. So that's why I think, and on top of that, these companies have fallen, not this year, before that, but they've fallen in line with the earnings. So effectively it's not that they have become very inexpensive or cheap. So that support also is not there. So that's why I think at least for us, it's still worth staying away from these names, even the big ones.
Okay. You know, there are a bunch of stocks in the broader markets also that are seeing some amount of activity today, some on numbers, some of our other news as well. We were talking about SRF earlier. Manappuram is another one, for example, that we were looking at as well. You know, BHEL, a whole host of names there. When it comes to, you know, a larger basket, Vipul, what are some of the picks that come to your mind? Perhaps the ones where valuations also are still looking a little attractive, that even if they're looking oversold at this point, but where we can actually find value.
So if you're talking about some of the larger names, as we were talking about the banking sector, so something like an HDFC Bank or a State Bank of India, very attractive valuations, and all of a sudden doing all the good things, and good things are happening to them on their own also. So in terms of balance sheet improvement as well as earnings improvement, they seem to be on the right track, and the valuations are not reflecting these two things. Similarly, if one is able to look at NTPC, that looks very interesting. Typical utility company, but two big differentiators. One, dividend payments are likely to be much higher than a typical utility company, and unlike a typical utility company, this company is set to see its earnings grow by a substantial amount in the next 2-3 years, and largely it's driven by the capitalization of some assets that are in the pipeline. So their capacity will grow by almost 60% in the next 3 years. So that will show up eventually also, and their PLF is also set to improve as the coal availability situation improves in India. So which means that their ROE will move up further. So even NTPC looks very good to us. So these three names one can really look at if one is looking at the large cap names.
There are some other names in the broader markets as well, you know, Delta, IDFC, for example, Gateway District Parks, just picking out some names that are actually seeing movement today, because remember, we haven't really been seeing a lot of buzz lately. Praj as well, another one there that's seeing some amount of activity shaping up in trade today. Delta, of course, seeing that rebound, Avan, from earlier in the week.